Hi everyone, Arnold van Dyke here, Director of Tax Services with Tax Audit, where we help taxpayers resolve their tax problems. Today we'll be talking about IRS levies. IRS levies is an area that causes a lot of anxiety for taxpayers, but as we'll see, it is an area that if you are diligent, you should almost always be able to prevent an IRS levy from occurring or be able to release a levy once it has occurred. First off, in order for the IRS to levy a bank account or any type of other account, securities, retirement, any type of financial account, or even a home for that matter, or any type of hard assets, there has to be an assessed balance. How does the IRS get an assessed balance? Well, an assessed balance either has to be from a filed tax return or it has to be from an audit or an assessment made by the IRS if no return was filed and the IRS filed a substitute return for a taxpayer. Once there is an assessed balance, in almost all circumstances, in all circumstances except for Jeopardy assessments, which are very rare, the IRS will first send you a bill. That bill is just going to show the amount due, show the tax years for which the bill is for. If that bill is ignored, the IRS will send you a second reminder, usually about 45 days after the first bill. And then if that is ignored as well, usually 45 to 60 days after that, the IRS will send out a notice of intent to levy. Now, the notice of intent to levy gives the IRS the ability to levy any state refunds, some other smaller type of property rights. But then before the IRS can actually levy any accounts, they have to send out a final notice of intent to levy. In response to the final notice of intent to levy, a taxpayer can file a request for a collection due process hearing within 30 days of the date of the final notice of intent to levy. And if a request for a collection due process hearing is filed, the IRS cannot levy your account until the hearing is finalized. And if the hearing is finalized, you still have the ability to even appeal the collection due process hearing determination in tax court. So a lot of avenues available for taxpayers in order to prevent a levy and try to work with the IRS to get some type of installment agreement or collection alternative such as an offer in compromise or not collectible status. Now, what if a levy is already assessed on your account? Let's say you ignored the IRS and you didn't file your tax returns, and all of a sudden you see that the IRS levied a bank account or other type of financial account. Well, the first thing you would need to do in order to release a levy is you would need to have all tax returns filed. So the IRS will not even discuss releasing the levy until you can show that all required tax returns are filed. So that's the first thing you would need to do in order to get an IRS levy released. The second thing you would need to do is you would need to provide the IRS with a collection information statement, either a 433A form or a 433F form, depending on whether you're dealing with a revenue officer or automated collections in the IRS. Once you provide a collection information statement, which shows all your income and expenses, as well as all supporting documentation, the IRS will propose an installment agreement or place your not collectible status depending on your financial situation. And at that point, the levy will be released if satisfactory. If the IRS continues to refuse to release the levy at that point, you can also file an appeal through the Collection Appeals Program to get the levy released in appeals. So even if you missed your opportunity to file a request for a collection due process hearing, you can still appeal an IRS revenue officer or automated collection decision through filing a Collection Appeals Program hearing, a CAP hearing for short. So that's that's levy, in a nutshell. If you have any additional questions or need assistance with any IRS levy release or preventing an IRS levy, feel free to contact us or visit our website.